Hi, I'm Cheryl-Lynn Freeman from Zanzi Business Services. Today we are going to be covering quite a topical issue that I see questions about all the time. Myself as an accountant and tax practitioner, I always get these questions from a number of non-profits. It sometimes is a very painful and a tedious process for some to go through. I'm going to be chatting about registering as a public benefit organization. I'm also going to be speaking about tax compliance. Sometimes I feel I'm an accountant, sometimes I feel people think that I'm a magician because they just expect magic to apply for a funding application when tax has been left almost like a minefield. It's when you just hit something, it explodes because things have been left maybe for months, for years. And it exposes the organization to a level that you do not want it to be, where you can even owe up to hundreds of thousands of rands to SARS if you don't manage things in the manner that you should. So the first point, myth I totally want to kill. As a non-profit organization, it doesn't mean that you do not pay tax. Remember, there are different forms of tax. You get, just to give you a basic overview, you get your income tax. So that is based on the actual monies that you get into the organization and monies that you paid out. Whatever that bottom net surplus figure is, you can pay tax on that if you have not yet registered as a tax exempt or PBO organization. Then you get what we call pay as you earn, and pay as you earn is if you have employees in your organization that earn at least over 6,500. You can go to the pay as you earn tax tables that you can get from the SARS website. I'll also put it as part of the resources for this course. Then you will be liable to pay that and deduct it from the employee's salary and pay that over to SARS. And even when you do get tax exemption status, you will not be dismissed or exempted from paying your employee, what we call employee taxes. Pay as you earn is employee taxes. I can tell you I've never seen the tax exemption unit ever exempt any organization from that. However, you could be exempt as an organization from skills development levy, and you need to review the PBO letter, the approval letter that you receive for a paragraph that refers to SDL. If it does not refer to SDL and you have a salary bill of over $500,000 a year, then you become liable for skills development levy. And then the third tax that I want to speak about that's really relevant, and I feel sometimes it's almost a stuff up to a certain extent, is your VAT, your value added tax. And this is a huge benefit for some organizations because if you can prove that you've got some sort of what we call taxable supplies, so those are maybe goods that you sell as an organization that's over or potentially over $1 million, or you can prove at least is 50,000 if you're going to do a voluntary VAT registration. The nice thing about VAT is that you as an organization sometimes and a lot of the times will get back more money from SARS. So initially when you buy your goods and services, you buy it with VAT, right? But later on you then be able to submit your VAT return to SARS, and then you'll be able to get that money back that you previously paid and claimed as an actual refund, and that's real cash, mullah money in the bank, and everyone is smiling about that because we know cash is king and we need to hold on to any penny that we can to utilize to serve our beneficiaries better. So when we look at income tax, I just want to look at it from a perspective of the organization being what we call a normal taxpayer. So if in the interim you maybe registered the non-profit organization or non-profit company for income tax purposes, but you have not yet done your tax exemption status or applied as a PBO, then you would need to be obligated in the following terms. You would need to then provide or submit what we call provisional tax returns. Donations that are unconditional generally are exempt from tax. It means that no tax is chargeable on donations, but that doesn't mean that you don't disclose it. Never think or disregard any figure that you have on your financial statements as irrelevant because you think, no, this is a non-profit, we don't need to disclose this income, we don't need to disclose this expenditure. you need to disclose on your tax return your annual financial statement figures as is, because you can have an audit. SARS has the right to audit you at any point in time, so please make sure that you provide accurate figures and that is justifiable through supporting documentation. Otherwise, SARS will penalize you and you'll be forced to pay a liability that might place the organization in a very dangerous position financially. So you'll have these 2 provisional tax returns that you have to submit, and it must be done February and August, and it's 6 months estimate. It's just your turnover and what you estimate at that point in time your surplus, your deficit to be in the organization, and any tax that would be paid on that at 28% is the standard rate if you are not a tax exempt organization at that point, but you do have an income tax number. Then on an annual basis, you complete the same return than that of a normal private company. It's called the ITR 14, and that is what you would complete for your tax return. And that would be on an annual basis, and it's usually due a year after. So say for example, you've got your annual financial year end that ends in 2019. Say you have a financial year end, maybe that is the end of February. How do you find out what your financial year end is? If you are a non-profit organization that is registered with the Department of Social Development, then you can do an inquiry to them to maybe find out what is your compliance status with them, and then you'll see on there one of the details that they provide you feedback on is to state on there what the financial year end is. It should also be stated in your memorandum of incorporation or your other founding document that's called a constitution. For a non-profit company, you can request your disclosure certificate from CIPC, and then you'll be able to see that on your 14.3, core 14.3 document. Your financial year end should be on there. So that is basically if you are treated as a normal company or normal taxpayer and you don't have tax exemption status as of yet. And do remember, even if you've got a loss in the organization, you still need to do the return if you want to maintain the status of the organization, and maybe you're just lifting and developing some fundraising efforts before you go into actively implementing projects or programs. Then you need to indicate that the organization is dormant in the tax return when you do submit what we call a null return. So you're going to put in 0 figures if there are no financial transactions in the organization as of yet. Sometimes the cost exceeds the benefit of having to do, if maybe you have an account that only has bank charges, I would just leave that as is and then submit the null returns, because it's not material to SARS to be able to submit it. But when you start getting donations and things like that, please keep proper records and then submit those accurate records to SARS, because they can audit you at any time, and if you are a tax representative or public officer of the organization, you will be held liable in your fiduciary capacity as a board member, as a director, to be able to practice due diligence when it comes to your tax affairs. Then it comes to the PBO side of things. So I see a lot of people interchange this term with other things, and it's not what most people think it is. So a lot of people will compare your PBO and they'll say use CBO and they'll use NPO. No. A PBO is a public benefit organization, and it can take the form of a non-profit organization, it can take the form of a non-profit company, it can take the form of a trust that is fulfilling public benefit activities that is there to serve the public at a non-profit perspective. So you're not making money to profit, and there's no shareholders or owners. And please take cognizance of that fact, because I see people trying to fill out what we call the BE affidavit, and then they use the affidavit that has the ownership on it. A non-profit organization, whether it's a non-profit company or whether it's a non-profit organization, does not hold any ownership. They only have board members that they've appointed or directors. So please take note of that. So looking at the definition then of PBO, so you can apply for tax exempt status, which means there are certain types of taxes that you as an organization, including income tax, it could be skills development levy, it could be estate duties, that you would be exempt from as an organization. When you do your PBO application, it would depend on the tax exemption unit based on the supporting documentation you provided, what they would grant exemption for. Remember that this is not a smack bang registration that you do at a SARS branch that you would normally do for income tax. This is actually quite a process, and I think more so than anything else, it's a lot of paperwork initially. So if you're going to decide as an organization you're going to apply for PBO status, please be dedicated to the process to do that. You're only going to utilize the SARS branch channel, you're going to utilize a tax practitioner to be able to submit that documentation for you or on your behalf. Then it will go to the tax exemption unit in Pretoria, and they say that they always indicate the time frame. The standard time frame now is 36 working days. It could take a shorter period of time, it could take a couple of months. So make sure that you don't put so much pressure on yourself when it comes to your funders, and that you actually plan for that specifically as well. There are quite an extensive list of things that you need to look at for PBO. I've included that information for you. However, there are just some key things in that actual PBO list that I would want to go through with you. This list that I'm sharing with you is a list that I've received and taken from the SARS branch. I went through that painful experience of having to go back to SARS. When I started initially submitting PBO registrations on behalf of organizations, I found myself having to go back 3 or 4 times, and SARS is not the best place to be. It's not like the club that you always want to go to or something, or whatever your favorite place is, the favorite restaurant that you like to go to. It's not that kind of place. I'm sure you've experienced it just as hard as I have. But the benefit of using a tax practitioner is that they will go at an appointed time. The important thing is that the organization must be registered for income tax. They must have an income tax number before the tax practitioner can assist with the PBO application. That is another number that you are going to be issued. However, if you do not do that, the problem there is that the tax practitioner will be limited. They cannot submit that application on your behalf if you are not registered as an organization for income tax. It would mean that the tax representative from the organization has to physically accompany the tax practitioner to the branch to do the income tax registration, and thereafter to submit all your PBO documents. I'm going to just provide you with a brief overview of what you require for your PBO application. If you can win with these documents, you can save yourself money and you can actually do this yourself if you are up for the challenge. So one of the first things that you need to consider when submitting your PBO application is that you need to appoint what we call a public officer. So you're going to have 3 tax representatives, and those need to be people that are sitting either as directors if you're a non-profit company, or they need to be listed board members. And remember, if you're going to select those tax representatives, they must first be appointed. If they are not appointed and if it's not reflected on your registration documents, change that first. Another important thing to remember is that these 3 representatives must be independent. That means they cannot have the same surname. So if you are sitting with an organization that has 3 people and they maybe have the same surnames, what you need to then do is that you could either change them and resign some people and add some people, or you could just add to the pool. A nice number to work on is 5 board members. You need a minimum of 3 board members for NPO or NPC registration, but a number of 5 members. And then if you look at your key positions, you need to look at your chairperson, your treasurer, and your secretary. Those are your 3 people that usually will act as tax representatives, and most times it's your treasurer or your chairperson that is appointed as the public officer. This is the person that would be the main contact person for SARS if anything or an inquiry does pop up on your tax compliance status. Also remember that this public officer must be registered for income tax as an individual. Then you need to complete what we call an EI1 and EI2 form. And these need to be signed by all the representatives. Their details need to go on there. You need to indicate which sector you are applying for specifically. And over and above your PBO activities that you select, you also need to select your Section 18A activities. And you need to reflect on what are the projects that I have in the organization. You also need to reflect on what is in your constitution and align it, because your constitution is going to provide evidence of what you do. You can add a description of projects and activities that you're doing if you want to enhance your application to make sure that you get your PBO status. And then there's a status over and above that I'm going to just briefly chat to you about, and that's what we call the Section 18A status. So firstly, you're going to be approved as a public benefit organization. You're going to be tax exempt in terms of income tax, usually estate duty, and there sometimes are organizations that would be exempt from skills development levy. However, for Section 18A of the public benefit activities, there are particular focus areas, and those are the areas that would be your Section 18A public activities, public benefit activities, and those are listed on that particular form. Then you would select the ones that's applicable to the organization, and if SARS is satisfied that you provided sufficient information for that, they can grant you that status, but it is at their prerogative. It is based on their assessment of your application. The benefits of having the Section 18A status over and above just being a PBO, a tax exempt organization, is that you can provide what we call Section 18A receipts to companies as well as individuals that provide donations to the organization. You can issue them with a receipt, and they can then deduct from their tax return their donation made to your organization as a tax deduction for them. This is used as a common form of fundraising, so that is why one incentive as to why you would want to register as a PBO and a Section 18A organization. You need to have your constitution. If you are a non-profit organization, you need to have the original certificate. So I can tell you a trick here. You know, some people have to climb hills, valleys and mountains to get the NPO certificate, so they are very holy about it. So what I do is I recommend to my clients, make a color copy of your certificate and laminate it and give it to me. Then you would get the impression that it is an original certificate. Because once you lose that certificate, it is a nightmare, and it takes quite a bit of time to be able to replace that certificate. Then you need to have a appointment letter or resolution or form for your public officer. I advise that you use the standardized one provided by SARS. I put it as part of this pack for you to review. Then to have the proof of address for the non-profit organization. If maybe one of your directors has used their personal address, then they need to complete what we call a CRA01 form. They will then have to provide proof of address, maybe it's a municipal bill, a telecom bill, or another cell phone, or another bill that's been posted to them that's not older than 3 months, and then they can make that declaration to say that I'm the representative using this address on behalf of the organization, and they would also physically sign that CRA01 form. And then for proof of address, we also need that for the public officer. And then you would need certified copies of your office bearers or all your directors if it's a non-profit company. And also remember, this cannot be older than, the certification on these cannot be older than 3 months. If you are using smart ID cards, you must print it on the front and the back of that smart card onto one certified copy. Another thing is your bank statements you need to have. If you are a company, the organization that's dormant, then you would need to provide NPO financial affidavit to say that you've only recently started, and it needs to be stamped by a commissioner of oath. as well, but you also need to provide your bank statements. If you do have an account open, you must have a bank account open to provide evidence of financial transactions. Then if you are an organization that's been running for quite a while, they expect from the beginning, right from the date of registration to the point that you are submitting it, you need to submit financials for each year that the NPO or the non-profit company has been in existence. Please make sure that the documents that you do provide are originally signed documents. They will not accept copies. If there's any document that needs to be certified, it must be originally stamped. It cannot be a copy of a certified document. It needs to be the actual certified document that you have. And then once you submit the application, you'll receive a reference number, and what I usually do is I follow up via email, teu@sars.gov.za, with my case number that I ask from the tax consultant to follow up on where my application is. Because if you just leave it, it sometimes feels like you put it in a black hole and you don't know what's happening. So you need to keep your application, you need to be on top of your application at all times, to the point that it gets registered. You will then be issued with a letter, or you'll be asked for more information if there is more information that is required in terms of your application. And then once you get that, make sure now that you manage the tax returns side. So you might be registered as a public benefit organization that's exempt from tax with Section 18A status. It does not exempt you from not submitting tax returns. You still have to submit a tax return. Just remember, please submit the correct tax return. I've seen corrections that I've had to make from other bookkeepers that has actually used that. Incorrect tax return. It's a 12 EI tax return that needs to be submitted for that. One of the other things that has changed from a SARS perspective, you might know it as a tax clearance certificate. They no longer have tax clearance certificates. They now issue you with what they call a tax compliance pin letter, either from a tender or good standing perspective, but it is still a formal document. It just looks a little different from your standardized tax clearance certificate. You cannot submit any returns in branch. Everything has to be done on SARS e-filing, unless it's an actual organizational income tax registration where you want to get your income tax number. But once you have that number, SARS is going to turn you away for returns. Those type of things you need to manage online for all tax types. And the nice thing that I love about the SARS e-filing platform now is that you can see your tax compliance status. Before, you had to hang on the phone for up to an hour and you had to inquire from a tax consultant what was outstanding. But now you can actually go on, once you've got it activated or your tax practitioner has access to your profile as an organization. Then it's pretty easy to manage it from there. But it's making sure that you get your ducks in a row, that you get your house in order. I find organizations just want money left, right and center. But you know what? You've got to build the trust and the financial efficacy of your organization first. You need to be able to prove that you've got effective monitoring and evaluation and good governance in place from a financial perspective before you are trusted with money. You know, some people will provide you with $1 million, $500,000, some with 50,000. But every cent that you get in will make a difference to your beneficiaries. And it's up to you to make sure that you build a credible organization by managing your tax affairs in a way that you know is aligned to the law, and that you can sleep at night, that you're not wondering whether SARS is going to rock up at your door and suddenly arrest you for something. And there's one area that I'm quite concerned about that I see pop up that is a very, very high risk area at the moment, is with regards to pay as you earn. I see that a lot of organizations think that I don't need to pay this, but if you have employees, if you are paying them over $6,500, the actual amount does vary from tax year to tax year, but you are liable for pay as you earn that you need to pay over to SARS. And remember, this is a tax deduction from your employee on their salary, on their payslip. And if you are backdating it because you had not registered as an organization, I would suggest that you as an organization rather take the responsibility to pay that over, because you were negligent as the organization not to do that. Don't put that onus on a poor employee that doesn't even earn that much amount of money in terms of the liability that might be outstanding to pay it, or you get them to pay 50-50 or some sort of deal like that. I've had pastors that has been liable personally for over 100,000 rand because the church was not registered for employee tax. They weren't registered for pay as you earn. They were not submitting returns, and SARS has held the pastors personally liable. These are all officers that serve the community in the best way that they can. So please make sure that you help your employees. They are community workers, they are field workers that serve your beneficiaries that are needy, whatever need or special field that you are in as an organization. So make sure you have those things in order. As I say, it's better to be prepared and not have an opportunity pass come by than to have an opportunity come but you're not prepared for it at the end of the day. Sometimes people are sitting a week before a funding application has to go through, and then they're trying to run around. Plan ahead of time, find out when the funding dates are, and make sure even with the little money that you have, whether it's 1,000 rand or whether it's 100,000 rand you're receiving into the NPO account, if you are going to be faithful in little, then you'll be able to manage much. I hope that this has given you some sort of overview in terms of a tax perspective as it relates to a non-profit organization. There will be more videos to follow. There will be more information to follow. It's an area where very few things change when it comes to a non-profit organization in tax. But even acts and legislation can change at any point in time. So be cognizant of that, be aware of that. Subscribe to my newsletter from Mzansi Biz on our website mzansibiz.co.za, just so that you can keep track of any legislative requirements or compliance changes that do take place. Thank you. I really hope that you've got some sort of gem, or maybe there was something in your mind that you were boggling with in terms of tax, and that you were able then to look at this and see, Cheryl-Lynn, you've given me at least one aha moment through this session, and thank you so much. If you've got any questions, please drop me a mail. If I have the time, I'll be more than happy to respond to you.